Welcome to XFO Intelligence Podcast. I'm your host, and today we're diving deep into the global family office landscape for 2025 and beyond. As we move through 2025, family offices worldwide are navigating an increasingly complex landscape characterized by geopolitical tensions, technological disruption, and unprecedented intergenerational wealth transfer. Today, we'll explore how the most sophisticated family offices are positioning themselves not just for returns, but for resilience across generations. Let's start with what's really driving decision-making in 2025. Geopolitical uncertainty has become the dominant force, with a striking 84% of family offices citing geopolitical fears as the top driver for defensive asset allocation. This isn't just tweaking around the edges. We're seeing fundamental shifts in how portfolios are constructed. Alternative assets now command 42% of global family office portfolios, up from 39% just 2 years ago. Private credit is claiming over 32% of allocations, while infrastructure investments are exceeding 30%. But here's what's really telling. 70% of family offices now view trade fragmentation as their primary risk concern, surpassing traditional worries like inflation or market volatility. This perception of a splintering global system is triggering significant strategic adaptations. We're seeing increased currency hedging against USD volatility amid debt crises and trade conflicts. Family offices are no longer viewing market correlations through purely economic fundamentals. They're applying a geopolitical lens to everything. Now, in response to these persistent uncertainties, there's been a significant shift toward hard assets and essential resources. Gold, farmland, water rights, and critical mineral royalties are gaining serious traction as hedges against systemic risks. Water security technologies have become a particular focus area, with investments flowing into desalination, water recycling, and efficient agricultural systems. The energy transition remains a strategic priority despite broader uncertainties. Family offices are intensifying investments in renewables and resource security, reflecting a dual mandate: addressing climate imperatives while securing access to essential resources in an increasingly fragmented world. Speaking of geographic shifts, Hong Kong has emerged as Asia's premier family office hub. Projections indicate it will host 3,000 family offices by 2025. That's remarkable growth driven by strategic tax reforms and innovative residency incentives, particularly the Capital Investment Entrance Scheme. This program has already attracted over 500 applications in its first 6 months, injecting $41 billion into the local economy. This concentration has prompted increased regulatory vigilance, with Hong Kong authorities eyeing on fake family offices to maintain ecosystem integrity. It's a fascinating case study in how hub formation creates both opportunities and risks. Now let's talk about what might be the most critical challenge facing our sector: the $68 trillion succession challenge. Despite this unprecedented wealth transfer underway, succession planning gaps persist. Only 53% of family offices have formal succession plans in place. For families managing generational wealth, this statistic should be deeply concerning. However, innovative solutions are emerging. AI-powered legacy vaults are gaining adoption, with early implementations showing potential to reduce generational wealth decay by 70%. These technologies focus not just on financial preservation, but on capturing family values, decision-making frameworks, and institutional knowledge. Because let's be honest, human capital often determines whether financial capital survives transitions. Technology is reshaping more than just succession planning. Cybersecurity has evolved from operational concern to foundational wealth preservation discipline. AI-powered threats have elevated security requirements, with zero-trust architecture becoming baseline rather than best practice. This reflects recognition that digital vulnerabilities can compromise entire family enterprises, regardless of investment performance. Asset tokenization is accelerating across our sector, with projections indicating the market will reach $1.6 trillion by 2030. This digitalization trend is particularly impactful for historically illiquid alternative assets, potentially enhancing portfolio flexibility while creating new complexities in valuation and governance. On the governance front, formal structures have proven essential for multi-generational success when implemented proactively. The most effective frameworks balance flexibility with clear boundaries, allowing adaptation while preserving core principles. ESG integration continues despite regulatory ambiguity, with 71% of family offices maintaining ESG mandates, regardless of changing policy environments. Interestingly, we're seeing network strategy evolution as well. Quality is increasingly outweighing quantity in relationship building. Curated, high-value partnerships are proving more impactful than broad, shallow networks. In volatile environments, deep relationships with proven partners provide better optionality and intelligence. However, there's an interesting contradiction emerging. U.S.-based family offices continue showing strong home bias, with 86% prioritizing domestic market exposure despite globalization trends and acknowledged geopolitical risks. This highlights the tension between risk awareness and behavioral comfort. So what are the strategic imperatives for 2025 and beyond? First, build resilience architecture. Portfolio construction must prioritize antifragility, designing systems that benefit from volatility rather than merely withstand it. This requires appropriate allocations to hard assets, jurisdictional diversification, and stress testing against geopolitical fracture scenarios. Second, accelerate succession planning. The $68 trillion generational transfer demands urgent attention to formal succession frameworks, including values preservation and next-generation capability development. Third, integrate digital and physical security. Cybersecurity must be elevated to core wealth preservation discipline status. Fourth, balance jurisdictional strategy. While hubs offer compelling advantages, concentration risk requires thoughtful diversification. Finally, focus on essential systems. Investments in water security, food systems, energy infrastructure, and logistics automation represent not just returns opportunities, but hedges against systemic breakdown. The family office landscape of 2025 reflects a sector in profound transition. Success increasingly depends on balancing defensive positioning with strategic optionality, preserving core assets while maintaining flexibility to capitalize on disruption. The most resilient family offices are those that have moved beyond portfolio optimization to system design, recognizing that wealth preservation across generations depends on integrated approaches spanning investments, governance, technology, and human capital. For our listeners, family office principals, next-generation family members, and advisors, I want to emphasize that this transformation requires community and shared insights. The challenges we're facing are complex and interconnected, and no single family office has all the answers. That's why I want to invite you to join the XFO Connect community. This is where we share private insights, discuss emerging trends before they hit the mainstream, and collaborate on solutions to the challenges we've discussed today. XFO Connect regularly hosts members-only events where principals and advisors can engage directly with peers facing similar challenges in an exclusive, confidential setting. If you're interested in accessing deeper intelligence and connecting with like-minded family office professionals, I encourage you to reach out directly. Send an email to xfointelligence@gmail.com, and our team will provide you with information about joining XFO Connect and our upcoming members-only events. The landscape is changing rapidly, but with the right community and insights, family offices can not just survive but thrive in this new environment. Thank you for listening to XFO Intelligence Podcast. Until next time, stay resilient, stay informed, and keep building for generations. This has been your host, reminding you that in family office management, resilience is not just a strategy, it's a legacy.